Poll current price 28 cents. Given current market momentum and speculative flows into altcoins, we can expect POL to maintain support around 55 to 60 cents with upside pushes towards 75 cents if exchange liquidity for POL migration scales smoothly. Polygon has historically outperformed during narrative-driven phases, showing 40 to 70% moves within 4 to 8 weeks. If Bitcoin consolidates and ETH continues to rise toward 0.06 ETH/BTC ratio, POL could revisit its $1 to $1.20 range, a psychological level and prior support zone. Base case, $90 to $1.10. Bull case, $1.20 plus if L2 rotation plays out strongly. Polygon is currently undergoing a pivotal transformation as it migrates from Matic to POL, with the ambition of becoming Ethereum's primary coordination layer for scaling. This transition, alongside broader market tailwinds, positions Polygon as a compelling short-term trade opportunity. Over the next 1 to 2 months, we expect the narrative around Polygon 2.0, combined with institutional adoption and ecosystem momentum, to support a bullish outlook. Fundamental analysis. Polygon's core revenue model is driven by transaction fees collected on its proof-of-stake, POS, chain, and zkEVM rollup. While transaction revenues have faced pressure in recent quarters due to competitive headwinds from Arbitrum and Optimism, activity on zkEVM and ongoing dApp deployments are stabilizing fee income. Gross margins remain structurally high, consistently above 80%, reflecting the low validator cost base relative to transaction fees collected. Importantly, Polygon Labs and the Foundation hold substantial treasury reserves from the 2021 to 2022 bull market, ensuring liquidity and free cash flow even during weaker activity cycles. In terms of valuation, Polygon trades at a discount to many of its L2 competitors. Its FDV/TVL ratio remains lower than Arbitrum's, suggesting an attractive entry point from a relative value perspective. Insider ownership is concentrated in the founding team and Polygon Labs, with no notable insider sales in recent months, an encouraging signal of confidence during the POL transition. Thesis validation. There are several reasons why a bullish stance on Polygon is justified in the near term. First, the migration from Matic to POL and the unveiling of Polygon 2.0 has generated strong narrative momentum. By promising enhanced scalability, interoperability, and a refined governance structure, the upgrade is driving attention from both institutional and retail investors. Second, Polygon's ecosystem adoption remains among the strongest in the space. High-profile enterprise integrations with brands such as Nike, Reddit, and Starbucks demonstrate Polygon's differentiated positioning beyond DeFi, giving it a diversified user base that other L2s have not yet captured. Third, macro conditions remain supportive. With Bitcoin trading comfortably above $100,000 and Ethereum showing relative strength, altcoins with strong roadmaps and credible execution, such as POL, are well-positioned to benefit from capital rotation. That said, risks should not be overlooked. Polygon continues to face stiff competition from Arbitrum and Optimism, both of which are gaining ground in the DeFi sector and may outpace Polygon's growth in total value locked. Additionally, the token migration itself carries execution risk. If exchanges or retail investors experience confusion during the transition, it could lead to temporary liquidity fragmentation or volatility in trading volumes. Balancing these factors, however, the outlook remains bullish in the short term, as ecosystem strength and narrative momentum outweigh execution risks. Sector and macro view. The sector for Ethereum scaling solutions is one of the most competitive and dynamic in the crypto ecosystem. Layer 2s and Layer 3s are increasingly critical as Ethereum scales, with networks competing primarily on throughput, transaction costs, and developer adoption. Polygon stands out by positioning itself not solely as an L2, but as a multi-chain ecosystem with zkEVM, POS, and upcoming modular solutions. This breadth of offering differentiates it from Arbitrum and Optimism, which are more DeFi-centric. On the macroeconomic front, crypto markets are benefiting from ETF-driven liquidity inflows, improving risk sentiment following expectations of Federal Reserve rate cuts, and broader capital rotation into high-beta assets. In such an environment, Polygon is well-positioned. It combines strong fundamentals with narrative-driven catalysts, which makes it attractive for speculative capital flows during bullish cycles. Longer-term catalysts include institutional adoption of Polygon for tokenized assets and NFTs, particularly given its enterprise-friendly positioning. The gaming and metaverse ecosystems also remain high-potential verticals where Polygon has historically led in partnerships. Finally, as the L2 ecosystem matures, consolidation may occur, with weaker networks losing share. This dynamic could strengthen Polygon's market position as one of the few enduring scaling solutions alongside Ethereum. Investment summary: Polygon's fundamentals remain resilient despite competitive pressures. Its large treasury reserves, high gross margins, and diversified adoption through enterprise partnerships provide a strong foundation. The POL migration and Polygon 2.0 narrative present compelling short-term catalysts, while macro conditions create a favorable backdrop for high-beta altcoins. Overall, the investment thesis for the next 1 to 2 months is bullish.